Welcome back to Investing and Trading Live. The final segment today here, talking about the stock market, how it works, how it moves, insurance policies for your retirement accounts, but also income strategies if you have that time when you get laid off. A backup plan, that way you're not stuck to nothing, you're not scratching just to get by. Having a strategy set up ahead of time and hopefully living the life that you choose to live. We had a lot of people texting in for this free investing class. Congratulations. If you missed that, text the word investing to the number 210-210. That's text investing to the number 210-210. Pick a date that works for you, and we'll make sure we get you a call. That way we get you set up for the right time and the right time and place here at Online Trading Academy. If you missed part of the show, check out the podcast, Apple Podcasts, iHeartRadio, and Spotify. That's Investing and Trading Live. Or watch the YouTube stream if you missed part of it. Just go to Josh Lilquist on YouTube. So, Al, in this segment here, in the final segment, we alluded to in the last segment about insurance on a portfolio. We talked about when you buy a house, what's the next thing you do? You have to have insurance on it because in case something happens. Right. There's a strategy in the markets that does the same thing, say on a 401k or an IRA or just a regular trading account. I want you to explain that, and after we do that, I want to get into some commodities, going back to the OTA picks, one of the services that Online Trading Academy has, or the tools that Online Trading Academy has for income strategies.
Well, the important thing in trading and investing is to protect your assets. It is to make sure the real bottom line, Josh, is not how much you make; it's how much you keep that's important. And a lot of people this last year realized that what they have right now, what they're keeping, is less than what they had the year before in 2021. So, and we've seen a couple of things happen with people that are coming into these classes. Number one, a lot of people lost money. 20-30% of their assets were gone, especially in 401ks. But there are some people that still have some big gains from assets that maybe didn't take the hit, or maybe it was company stock, and we see this often with people that are fairly wealthy, and they have a position and they don't know what to do. They think maybe it might go up a little bit more, but it could go down. And how do you handle that? There's a strategy you can use with options for that too. It's a combination of an insurance policy and then a boost to the value of the assets you have, and we can talk about that. If you have a big portfolio and you want us to kind of go over that strategy with you, we'd be happy to do that in these classes. You know, you mentioned people being laid off. That's a concern. Yeah. Well, the other concern is not, even if you're still working, if you're not laid off, inflation has had a huge impact on a lot of people, on the way they live, how they can look at the future for themselves, what they have to kind of cut back on now. So inflation's had a big impact, and a lot of people need that extra income to overcome the impact of inflation, or if you're laid off, to have something to relent, because the bills keep coming in.
You're right.
So the option strategy is there's only two options. You can combine those two options to create a number of different strategies, but the only two options are a call and a put. And one of those two is basically the insurance policy. Yep. It's a put. But what you need to do is look at your portfolio. What's the volatility, the beta of your portfolio, and then we can help you, or you can put together an insurance portfolio or insurance strategy that kind of hedges that volatility.
Yeah, we've been having a lot of people come into these investing classes that are looking for that insurance on their portfolio, and rather than just trying to figure it out, we can show you how that's done in these investing classes. Al, you talk a lot about that's a big topic in the class that you teach here at Online Trading Academy. So if you want to see how to protect your portfolio in these down markets that we're having, text the word investing to the number 210-210 for 2 seats for a free investing class. We're going to make sure we get you a call back and find a date that works the best on your schedule. Text the word investing to the number 210-210. So, Al, you kind of led me into the next topic with inflation. Things are not, they're saying it's coming down, but things are so expensive right now. You go buy eggs, you go buy anything right now.
Eggs are up 70%.
Yeah, crazy.
People are going to be paid a bonus in eggs going forward.
Exactly. So things aren't getting any cheaper, and people's incomes aren't getting any higher. So they're looking for a second source or another strategy to have income. And the futures market is a great opportunity on that. And on our OTA picks here, I just want to go through one real quick. It's oil futures. Basically, you're just buying a contract, and a lot of people think, well, I don't have hundreds of thousands of dollars to buy oil. Well, the great thing about this is there's two types of contracts. You have the mini and you have the micro.
Right.
So, for example, for every penny in this market, it's $1 only in the micro. So this is the crude oil micro futures. And this is a long opportunity they had on here. And as we kick the show off at the beginning, it has your entry points, your potential targets. It's an opportunity. You don't have to take it. You can take it, but it's been helping people build consistency and confidence for those income strategies. So this had a potential entry at, let's see here, around the 77.30 mark. There's a zone there. We talked about that in the first segment. And they actually have two targets on here as well, Al. They have one at about 2 to 1. So I want you to break that down again in case someone missed the beginning of the show. Mm-hmm. And then they have about a 5 to 1 to have that, we call it the runner. And that way you don't have to be right every single time. So I know some of our listeners missed the beginning of the show. Explain what that 2 to 1 or a 3 to 1 actually means again.
Yeah, the reward risk ratio is really the most important ratio in investing and trading. It's the amount of reward you can get compared to what you're risking on a trade. And you should never enter a trade where the reward and the risk is equal. You want to make sure that whatever you are putting into a position, it has the possibility, the potential for you to have a return, and if you're wrong, with just a small loss. What we teach our students is how to look for a position that has a minimum of a 3 to 1. Now, that doesn't mean you're always going to get 3 to 1. Maybe you do a 2 to 1, or maybe it becomes a 5 to 1 or 10 to 1. But if you do the 3 to 1 reward to risk ratio, as I mentioned earlier, you can be wrong 75% of the time and you'll break even. If you're right half the time, you'll have a double. So you don't have to, and you won't be right all the time, but you don't have to be. And there aren't many jobs or careers where you can be right only half the time or less and be successful.
Correct.
A surgeon, a pilot, they have to be right close to 100% of the time to succeed. In trading and investing, you don't have to, but identify a trade that you feel strongly gives you that opportunity to achieve that 3 to 1.
Yep. And as we talked about in the I think it was the first or the second segment, with you being able to use less capital. So let's just say, for an example, if an investor had $5,000 in an account, one contract looks like you would only be risking $180. So you're not using that whole thing. You just have that in your account.
Right.
And then you only risk $180 for a potential gain. In this case, it was roughly about a 5 to 1. I'll let you guys do the math on that.
Yeah,
so keeping that risk very, very small.
Mm-hmm.
That way you have higher potential wins. You don't have to be right every single time.
Yeah, and the first thing that we teach you, though, is the loss part, the risk part, how to manage risk, how to make sure that you never have a big loss. That allows you to participate in these assets that have huge potential. And most people think, well, if there's huge potential there, what goes along with high reward? It's high risk.
That's why we have that small loss, a protection there.
Exactly. So if you control that risk, keep that to a minimum, then you still have the potential for the big rewards.
Yep.
And that's really the number one thing. Start with that. Start with knowing how to lose properly. And I don't mean our goal is not to teach you how to lose all the time. It's how to teach you to lose the right way when you do have a loss, and make sure that your reward is large enough to compensate for that risk.
Yeah, we had a lot of people. This is a great show. A lot of people texting in with some different stock analysis, and maybe somebody wants to look at a commodity. I wanted to hit gold here today, but we don't have enough time for that. I think next week we'll talk about gold,
Sure.
Some different OTA picks there, some opportunities. But if you do have something you want us to look at, text the word investing to the number 210 with the stock after investing. So investing and oil, or investing gold to the number 210, and we'll try to get that on the next few segments here. When you do that, we're going to give you a call. That way we can see what you're looking to, see what you want to talk about. But also we have these investing classes. I mean, heck, bring these in. We can take a look at it and see something that you did, or we'll see what the opportunities were out there. We can't give you any advice, but we can guide you through what might be a potential opportunity there. So for this free investing class, we have these during the week. We also have these on the weekends. So text the word investing to the number 210 for 2 seats for this class. When you do that, you're going to get a quick start kit. we'll actually have some OTA picks in there.
Right.
So some of the things that we're going to continue to talk about here on the show, you're going to see that in there, so you can kind of follow along if you want to. So text the word investing to the number 210-210. And as you know, these are opportunities. You're not going to be right every single time. That's why we keep that risk very, very small, your rewards much higher, so that way you can build consistency and build confidence in your investing and your trading if you're looking for a second source. We talked about a lot here today, and I feel like we never have enough time, and we try to keep it fresh. We're the Febreze brothers. Let's hear today's OTA tip of the week.
You know what? I stole this one today from Muhammad Ali.
Okay,
not only one of the greatest, or maybe the greatest fighter of all time, but he actually had a fair amount of wisdom himself. And he said this. This is a quote. Because maybe before I do that, we find people that come in that don't have the confidence to do that. They think this is not possible for them. This is what Muhammad Ali said, quote, "Impossible is just a word thrown around by small men who find it easier to live in the world they've been given than to explore the power they have to change it. Impossible is not a fact, it's an opinion. Impossible is potential. Impossible is temporary. Impossible is nothing."
Boy, that's a tongue twister,
Unquote.
but it's a good one by Muhammad Ali, which had me thinking about something I saw on the interweb here this last week, and it was talking about the greatest athletes of all time, and Muhammad Ali was one of them. And you know who number one was, or what number one was? My golf partner every time he plays by himself. As always, same time, same place next week. Until then, retire young, my friends.